Welcome to tonight's live session. What I find very troubling, partly because it happened to me, and also partly because it's happening to millions of people in the world today, is how many 35-year-olds and people who are 40 and in their 40s, and they do not have a single investment to their name. Ladies and gentlemen, it is scary. It is scary to be 40 and you don't have an investment. It's scary to be even 30 and you do not have an investment, because as soon as you're 18, you can invest. In most parts of the world, by 18, you can invest. You can open investment accounts in many parts of the world and start investing even at 18. And I know 18 because when I started investment accounts for my children, they would, for some reason, and I don't know why the government does that, children are not allowed to have, they're not allowed to have investment until they are 18. Sometimes they're not even allowed to open their own bank accounts until they are 18. So if you're 30 and you don't have a portfolio to your name, I want you to change that tonight. I want that to change tonight. You cannot be 30 years old, you cannot be 40 years old or even 50, and you don't have a solid portfolio. So there are 7 questions that every beginner asks when it comes to investing. So we're going to look at those questions tonight, and I'm going to answer them, make them so easy for anybody, to begin. All right, so for those of you joining on Facebook, yeah, do tell us, do introduce yourself and tell me where you are watching from. Those of you on TikTok, do share where you are joining us from, okay, and what you're expecting to hear tonight. We are talking about investing, people who are new to investing, and we are talking about individuals, who are already 40, who are already 30, 35, and they do not have a single investment to their name. So first of all, I need you to change that. Okay, so everybody type in the comment section, I will change that. If you are 18 years and above, you should have a portfolio to your name. So type in the comment section, I will change that. The reason that many people struggle financially all their lives is because they didn't start investing early. So you see, many financial struggles you are having now that you are 35 or 40 resulted from the fact that when you were 18, when you were 20, when you were 25, you didn't invest. That is simply the situation. You didn't invest in the earlier parts of your life. So you've worked for 10 years, you've worked for 15 years, you've worked for 20 years of your life, and there is nothing to show for it. I meet people every day in that situation, people in their 50s. A 52-year-old man said to me, I have worked all my life. And when I look back, he said he was a civil servant. And then when he looks back, he said, there is nothing to show for it. So why there is nothing to show for it is because you did not invest. So do not take the subject of investing lightly. It is your very life. Investing today is the sure way to secure your future. Somebody type that in the chat, type that in the comment section. Investing today is the way to safeguard your future, is the sure way to make your future better than your present. All the financial difficulties you are having today is because you did not invest yesterday. All the financial difficulties you are going to have in the future will come from the fact that You are not investing today. So do you see how powerful that really is? So type it in the comment section, type it in the chat, everyone. All the financial troubles you have today are because you didn't invest in the past. You didn't invest yesterday. So all the financial troubles you're having today is because you didn't invest yesterday. All the financial troubles you will have tomorrow is because you did not invest, you are not investing today. I want that to sink in. I want to pause for a few seconds for that to sink in. And I would like you to type it in the comment section. Because when you type it, these things register in a very specific way. All the financial troubles you are having today result from you're not investing yesterday. All the financial troubles you're going to have in the future will result from the fact that you are not investing today. You've got to change that. So many times it's not really very complicated. Financial independence, financial freedom is not very complicated. We make it very complicated. We also complicate it when we want to get rich quick. My mentor, who will be 85 next month, told me that 25 years is enough for anybody in any part of the world to become financially independent. And then with the tools and technologies that we have available today, I would even say to my mentor that 25 years is great. Because if you're finishing college, you're finishing and graduating from the university at 22, like I did, I graduated at 22 before my 23rd birthday. So he was saying that 22 plus 25, that would bring me to 47. It said he was literally saying that by the time I'm 47, I should be done with anything with financial struggle. Unfortunately, it didn't happen to me. But with the tools and technologies that are available today, especially the financial markets, and then the technologies available, anybody, anywhere, from any part of the world can become financially independent in 10 good years. If you plan it very well, and then you're patiently running the plan. So please, ladies and gentlemen, especially my African brothers and sisters, because these things are not taught in our schools in Africa. They are not taught anywhere. I've been to several countries in Africa, in Southern Africa, in East Africa, in West Africa. I've been to many countries, and it is the same thing. People are not being taught. They are not being taught how to make a living. They are not being taught how to manage their money. They are not being taught how to multiply their money. So you see, someone like me, I went through school. I did very well in school. I did very well in primary school, did very well in secondary school. And then this one is not, I'm not just making mouth. You know, usually every parent tells their children, oh, that we used to come first in class. But in my own case, it's true. I came first in class. I won prizes. I was very academic. In the university, the same thing. Came up with the best grade I could. I missed the first class. But, you know, I came out. But then through all those years in school, through all those years in primary school, in secondary school, and in the university, which is supposed to be, you see, university, that's where you're supposed to know everything. Nobody taught me anything about how to make a living. Nobody taught me anything about investing. Nobody taught me anything about the cash flow quadrant. So all I knew was what everybody else knew. Come out with a good grade, go for the youth service, and then come into the labor market. And then start hustling and looking for a job. And you have found out, just like I found out, ladies and gentlemen, that is no longer sustainable, because we have the universities churning out millions of graduates, hundreds of thousands of graduates every single year, like in this country, in Nigeria alone. I'm sure it's the same thing in Ghana. Because people are finding it difficult also to get jobs in Ghana. And there are people sitting at home for 5 years, 6, 7 years, waiting for someone to employ them. Why? Because the school system did not teach us about investing. They did not teach us the simple financial principles that would allow us to live meaningful lives. So you find people, they graduated from the university 20 years ago, but right now they are underemployed. They haven't found their feet. They are not able to pay their bills. There are people who are in their 50s, early 50s. They are still begging for money to eat. They still come to my DM and say, oh, boy, I have 4 children. And then I can't pay school fees, and then we don't have food to eat. And I look at these guys, they're in their 40s, late 40s. Why? Because we were never taught. And then we were never taught the power of investing. Okay, so let's dive into these 7 questions that most people who are new to investing ask. And before I do that, I want to just share a little bit about investing to situate it in the cash flow quadrant. Robert Kiyosaki popularized the cash flow quadrant. For those of you who are on TikTok and Facebook, I'm sharing something on Zoom. I'm sharing something that you might not see. So you can join us on Zoom and see what I'm sharing, or you go to the YouTube channel, my YouTube channel. Make sure you subscribe if you haven't already done so. Just go to YouTube, type my name. There's only one name, Ogbo Awoke Ogbo. There's just one name like that. Type it. It will take you directly to my channel. There are over 520 videos like this one that can literally, so people are spending time on my videos and they are transforming their financial lives. They are changing their mindset about money, about business, about relationships. So spend time on those videos. Just like what you have heard tonight, you can imagine 520 videos are there free of charge. Okay. Someone is asking for the Zoom link on Facebook. So I'm going to put the Zoom link right there, right now, because I think when you come to Zoom, you are able to see what I'm sharing. And then you are also able to see my face, and I'm also able to see your face. All right, so I have just put the link on the comment section on Facebook. So you can click there and join us. Okay, so let's go back to the presentation. Okay, so that was the wrong one. PowerPoint. All right, so here we go. PowerPoint. Where are you? Okay, I think it's this one. All right. So the cash flow quadrant was popularized by Robert Kiyosaki and is a very important concept or framework to understand investing. So the E stands for employee. That's where the 9 to 5, where you have a 9 to 5. So in the 9 to 5, you are able to exchange your time, exchange your skills, your qualifications in the university for pay. So that's where you get the salary. That's where you wake up and go to work every single day. Now, the employee quadrant is very good, being an employee, because for many of us, that is that's the most important introduction to capital, the employee quadrant. That's where we get introduced to capital. But the employee quadrant can be very tricky Why? Because as an employee, you can get too addicted to the comfort of salary. You know, there's actually something called salary addiction. And so many people get so addicted to the safety that being an employee provides that they never venture out to do great things. Okay? Maybe they have some business idea. Maybe they have some other things, that they want to do with their lives, but they can't because once you stop working, the salary stops. But the powerful thing which people neglect about being an employee is that you are paid regularly, you are paid consistently. But the powerful thing is not that you're paid. The powerful thing is that you have the opportunity to save. You have opportunity that every time you're paid, to pay yourself first, as the richest man in Babylon put it, to pay yourself first, to save part of your salary. And then what do you save it for? You save it for investing, because ultimately, what will take you out of your financial struggle is not necessarily your 9-to-5 job, but it is what you did with the savings and the investments that you had while you were an employee. So it is very important. So let's be thankful if we are employees, but let us also be mindful that whatever we are earning as employees, we don't spend all of it, that we delay gratification so that we can leave that employee quadrant very, very safely. The S quadrant is self-employed. So often people are either employed or they become self-employed. So you see people running small businesses, doing retail, doing mini export. You are self-employed or providing services like accounting services, coaching services. So you're self-employed. So the challenge with that one is that it's difficult to scale yourself. It's difficult to scale yourself because you can only be in one place at a time. You can only be in one place at a time. And many times when you are not present in your business, you are not making money. So that's the challenge with the self-employed. So you do have, as it were, control of your time, but often the business might control you a lot more than you think. Okay. Now, the B stands for business. That's where you have big businesses. These big businesses have 500 plus employees. It's well structured. It's well run. They have systems and processes in place. They have corporate governance. So it is not necessarily a one-man show, just like the self-employed person. And your presence is not required for the business to thrive. Sometimes your presence is even a stumbling block for the business. Then the I is the investor. That is ultimately where you make your money work for you. In the E and S, you are working for money. But as an I, you are making your money work for you. So now with that context in mind, let's now talk about those 7 questions. The first one is there a minimum amount required for me to begin investing, or can I start with any amount? So this is a question that has stopped so many people, because people psychologically think that they must have a lump sum, that they must have some big amount before they start investing. If this has happened to you, just say yes in the comment section. If this has happened to you, you didn't start investing early because you always believed, you always thought that you needed a big amount of money, some huge amount of money to start investing. Now, the trouble with that is that many times the huge amount of money never comes. So you find people who have been waiting for a huge amount of money for 10 years. And for 10 years, they've never invested because they think, and I don't know who told them, but they always think that, okay, for me to invest, I need at least 1 million, or I need 5 million, I need 10 million, and then I can invest. But here's the good news for every beginner investor. You don't have to wait for big amount of money. In fact, in Nigeria, for those of you watching from Nigeria, you can start. You can even buy bonds for 1,000 naira. You can buy stocks for 5,000 naira. And I know that there's nobody on this call today that if you want to set apart 5,000 naira, if you look for 5,000 naira around your life this time, that you can find it. You can find it. So you can start with 1,000. You can start with 5,000 naira. Don't wait until it is 5 million. That's a major mistake. And do you know the interesting thing? It's actually the small amount of money that you're investing that eventually turn into that big amount. Because one of the miracles of investing is compounding. It's compounding. For instance, I heard about someone who bought 1 million shares of, I believe it was Presco. 1 million shares of Presco in 2025 years ago at about between 9 and 11 naira. As I talk to you, Presco is 700 and something naira today. I haven't checked. I think Presco is about 750 or 770 naira. So 5 years later, plus the dividends that they have been paying, that company has been paying over time. So there's a whole lot of inspiration, a lot of stories to inspire you to begin investing, because investing compounds. So you can see how 10 million naira invested 5 years ago in one stock becomes 750 million today in 5 years. So don't wait until you have the big amount. Start with the small, and then investing will compound it for you. Remember that there are 3 major skills when it comes to financial freedom. 3 major class of skills. The first one is the skill to make money, money-making skills. You need the skills to make honest money. There's a lot of dishonest money. And I guarantee you that dishonest money doesn't pay in the long run. It might look like a good idea. You're being sharp, you're making sharp money and quick money. And sometimes what you're making money from is shady. I tell you, that sort of money does not last. But you need the skills to make honest money, to earn honest living. You need skills, second set of skills, to manage the money you're making. There are people who make money. Some of you have friends who are very good at making money, but they are very bad at managing it. You know, I knew one particular guy who was extremely good because he was a natural salesman. So anything he sold, he made money. He sold telecommunications gadgets. He made lots of money. He sold real estate. He made lots of money. But he's always broke. Why? Because he does not know how to manage money. And the third set of skills is multiplying money. So managing your money, saving it, not squandering all of it is good. But it's not good enough, because if you don't multiply it, inflation can destroy your wealth. Inflation can make the value of your money come down. So you may, if 1 million naira today, it's not the same 1 million naira okay, let me put it this way. 1 million naira 3 years ago, it's not 1 million naira today. 1 million naira 3 years ago is more like 600,000 naira today. So the money keeps going down. So if you don't know how to multiply money, you will not be wealthy. And how do you multiply money? Through investing. And because investing compounds, you don't have to wait for big amounts of money. You can start with what you have. Second question, what should I do if I don't have money to start investing? So this is another question people ask. Some people say, oh, my salary is not even enough to pay my bills, so I don't have anything left to invest. I plead with you, get yourself out of that situation. Get yourself out of that situation. Whatever you need to do, earn more money or budget wisely. But by all means, never, no matter how small your salary is, by all means, never, ever spend everything that you earn, because the universe will punish you for that. How do I know? because every money you earn has two parts. It has the part that is the bread for the eater. That is the one that you use for your living expenses. It has a second part, which is the seed for the sower. So your salary serves two purposes: to support your living, that's your living expenses, and then also to support your investing. There are two things you should be doing with your salary. You live and you invest. But what do a lot of people do? They spend all of it. They spend all of it in entertainment. They spend all of it in gadgets, buying new phones, buying data, buying all kinds of things, buying clothes, buying shoes. They spend all of it in eating food, in drinking. I was amazed a couple of months ago when I got to know how much beer, a bottle of beer, costs today. I don't even know, but I think it's about 800, 900 naira, depending on the brand. And then some are more than 1,000 naira. And this is what some Nigerian men, I have watched some drink 5 bottles a day. 4, 5 bottles of beer in a day. If it is 900 naira, some of you who drink beer, please type the price of beer. I don't know how much beer costs right now, but just type it there. But can you imagine if it is 900 naira? It's probably more than that, because a little plastic bottle of Coke is about 500 or 600 naira now. And then some people also drink bottles of Coke, like 3 in a day. That is 1,500 naira. Do you know what that means in 30 days? So if you don't earn enough to support your living and then you're investing, by all means, find ways, start a side hustle, sell something, change that so that you can have some surplus for investing. You need to be able to save, to put aside money for investing, because if you see, saving is the mother of investing. Therefore, if you don't have savings, you can't invest. Question number 3. What are the different types of investment? I think I combined it with the 5th one, but let's talk about what are the different types of investment and which is right for me. So that's a question that people ask. Now, investing is basically putting money into a good asset. Asset is anything that puts money in your pocket, that brings money into your pocket. And liability is anything that takes money away from your pocket. So investing means taking some money and putting it into an asset that you are expecting to grow over the years. So that investment can be in real estate. That investment can be in also your business, but that investment can also be in the financial market instruments, money market instruments. Okay, it can be in stocks, it can be in bonds, it can be in exchange traded funds, ETFs, it can be in different things, okay, different financial instruments. So those are the types of investment. You can invest in real estate, you can invest in stocks, you can invest in mutual funds, you can invest in ETFs, you can invest in all kinds of things, okay? There are many financial instruments that you can begin to invest in. But let me also say at this juncture that the most important investment is investment in your mind. This is why I encourage everyone to start their journey of investment with learning. Learning, because the secret that most people won't tell you is that if you invest in anything you do not understand, you're very likely to lose that money. Let me put it another way. The quickest way to lose your money is to invest it in what you don't understand. People have lost money and they're losing money in real estate because they think that real estate is just to buy land or buy whatever. I've even lost money myself. You know, I bought 23 plots somewhere and I thought everything was okay. And paid for it, did all the necessary things. got it surveyed, did the power of attorney and things like that. And then the young people in the place, vagabonds who don't have any use for their lives, went and parcellated the place and then sold off to other people. So you have to understand whatever you want to invest in, you really have to spend time and learn about it. If you want to invest in stocks, learn about stocks. If you want to invest in commodities like gold, silver, oil, whatever, or grains, learn about it, spend some time. And the good thing is there's so much, there's availability of information on all these things today, books, websites, podcasts, but by all means, learn about it. Number 4, what's the difference between stocks, bonds, and mutual funds? It's another one that people ask of. It's quite confusing to a lot of people. So let me see if I can make it very simple. So in stocks, you own a share in a company. When you buy the stocks of Tesla, it means that you have ownership. You have a share. And whenever Tesla does well, and then they declare profit and then declare dividends, because you are a shareholder, because you own the stocks of Tesla, they will pay you because you are an owner. All right. So that is stocks. So if you look at stocks, like a company is divided into 1 million shares, 1 million bits. And then you say, okay, I want to buy 100 of the 1 million. Or you say, okay, I want to buy 200,000 of it. Another person will say, I want to buy 1,000. So at the end of it is total of 1 million shares divided, bought by different people. And then, of course, the reward, the dividends you are going to get, the capital appreciation you are going to get would be in line with how much you put in the stock. Bonds are different. In bonds, you're a lender. In stocks, you're an owner. So in bonds, you are lending money to the government, or you are lending money to corporate bodies to do their business. And then often bonds are referred to as fixed income asset. Because the way, for instance, the Nigerian federal government bond works is they have bonds for 2 and 3 years. In other words, you lend the government money and then they pay you interest. They pay you interest for the 2 years that they are going to use your money. And then at the end of the 2 years, they will now pay you the principal. And so right now, I think the federal government bond for February is at about 18%, 17 point something percent for 2 years, and then slightly higher for 3 years. So it means, let's say it is 20% to make the math easy for you to understand. So it means that if you lend the government 1 million by buying bonds, if you lend them 1 million at 20%, they will pay you every year 200,000. Now, the way they have structured it is that you are paid 4 times every quarter. So you are paid 4 times in the year. So the 200,000, they will pay you 50,000 naira every 3 months for 8 times for the 2 years. Then at the end of paying you 50,000 8 times, they will now return your 1 million. So that is bonds. Mutual funds are floated, by licensed bodies, issuing houses. So what they do, mutual, like it's called mutual. They pool funds from different people. So it is one fund. They can invest it in different things. They can invest it in stocks. They can invest it in real estate. It's not your business what the mutual fund is invested in. Your own is that you're putting your money into this pool of mutual fund. And then, of course, they share profit when they make profit. So that's the difference, basic difference between stocks, bonds, and mutual funds. There's also the one they call ETFs, okay, exchange traded funds. What those ones mean is that, for instance, you have a group of 30 stocks, 30 companies that are doing extremely well, and then they all come into that fund. The best known example, most people here in the world, is the S&P 500. So it's got the 500 top companies in the world in NASDAQ or New York Stock Exchange, where people can invest. So that is an index. That's an index fund as opposed to mutual fund. So there are so many instruments that if you decide to invest, you can learn about them and put your money there. So how do I choose the right investment? That's another common question. Now, what is a right investment for me might not be the right investment for you. The reason is that there is no right investment, as it were. It's only your investment, because my investment goals and objectives might be different from yours. I might be investing for retirement, for instance. I might be investing to build a house. I might be investing because I want to send my children to the best schools in the world. But you yourself, you might be investing for something totally different. So it is your investment goals that will determine the investment that's right for you. And then whether you are going to invest you're investing for the short term or the long term or for the midterm. So there is no right investment. That's why when you begin to invest, one of the first things you need to answer is, why am I investing? What are my investment goals? And then you define that. Based on that, you will now choose the right investment for you. 6, how do I manage risk in my portfolio so that I don't lose money? This is also important. It's an important question because investing, just like any other thing that makes money, also carries its risk. So for me, one of the ways I do manage the risk in my portfolio is actually to monitor it. Because what is good today, I invest in the stock market, and then what is good today might not be tomorrow. Why? Because there's news. Most of the times, the stock prices are responding to information, to the news about the company, like their performance, like if a company also acquires another asset, or maybe they are expanding, like BUS Cement right now, it's expanding its facilities. So that can affect, that's positive. Now, there are also news, information you will get, and then you know, okay, this stock, I'm likely to lose if I put it there. So one way you manage your risk is to, first of all, select very good companies. Select very good companies. So you don't select, if you are buying stocks, you don't just buy stocks because, oh, this one is cheap. This one is selling at 1 naira, 16 kobo. Oh, this one is selling at 1,500. So with my money, I can get 100,000 of this particular cheap one. Whereas if I buy the expensive one, I might only get 30 or 34. So some people reason like that. But in the long run, investing in that very, very solid company might actually be a better idea for you than that. Then secondly, monitor your investments. Don't just put your money into an investment and then leave it. You are going to lose it. Number 3, only do business with licensed brokers. Licensed brokers. Don't do business with apps and with groups that are not licensed. In every country, there is Security and Exchange Commission and other regulatory bodies that license, because the financial markets are very, very highly regulated. So if you're dealing with someone and dealing word of mouth with someone who is not licensed, like a licensed stockbroker, you are going to put yourself in very serious risk. And that's how people lost so much money in financial transactions with people who were never licensed. Okay. Number 7, what's the best way to learn about investing. The best way to learn about investing is coaching. Find someone, who is doing what you want to do, who has learned it. Call the person and say to him, hello, Charles. You have been doing very well in the stock market. You have been doing very well in this retail business. You have been doing very well in this. You've been doing very well in digital marketing. I see all your ads all over the place on Instagram, Facebook, and all that, and you're really killing it. How much does a session cost? How much is a session so that I can learn from you? Because in this part of the world, people are not, let me just tell you, you cannot become wealthy, the kind of wealth you're looking for, on free lunch. That's what people can tell you. There are certain things you will never learn. And I'm not ashamed or embarrassed to tell you that. There are certain things you will never learn until you pay. Do you know why? I find it very, very strange. Because the coaches I have paid and the people I pay, they are not doing anything. They're not telling me anything that they've not already said on their YouTube channel and all that. But for some reason, there's something about just committing. I guess because, like Christ said, where your heart is, that's where your treasure is. Another strange thing is that I found it very difficult to charge my clients $10,000 until I myself paid a couple of people $10,000 to be coached by them. And so Billie Jean's marketing is one of them. And it's just incredible because in coaching and mentorship, something that would take you 7 years to learn, just one session. I once paid Dean Jackson $5,000 for a face-to-face meeting with a couple of people, Dean Jackson, and that was in Florida. So I had to fly there myself. I paid for flights, paid accommodation, and paid him that $5,000. There were no PowerPoints, there was nothing. We just sat at the table and we were just talking and gisting. But I tell you, within the first 30 minutes of just listening to us, asking questions, talking, no PowerPoint presentation, nothing. I got my money's worth back. So, pay to learn, because paying to learn often leads to, often is something as paying to earn. Many of you have never paid for anything. You're always going, I had this Indian gentleman. I didn't know. Every single time when he heard about me, somebody told him about me, he was so enthralled, so awestruck. And then every time he said, okay, please, can I have tea with you? Can I do tea or something? I'm not a tea drinker or something like that. So then we will go to drink tea at some 5-star hotels in Victoria Island. Okay, the first one he took me to was in Ikoyi. Second one was in Victoria Island, some highbrow restaurant. Okay, then when we start having the so-called tea, he'll be asking questions. I'm making notes because he said, I want to pick your brain about this. So the thing was just insane. Third time he said, can I buy you tea? I said, no. I said, no. I called him, and this guy is the money. He could pay for it. But that is abuse of knowledge, because knowledge you get like that doesn't serve you anything. Buy me tea to pick your brain. What am I doing with tea? So guys, don't do like that. Find someone online, someone around you, in your community, in your office, in your mosque, in your church, whatever, who is doing something very well. Call the person. Call up the person. I know you're good, because most people who are doing things very well, they don't even have time to come and talk and teach you the things, the intricacies. Because many times, some of us is like we are casting our pearls before pigs. That's the way it feels. So there are many things I can't even share publicly because, but in a smaller group, I can do that. Chioma Ifanyeze, some of you know her. She does extremely well. She does extremely well what she's doing. So I called her up. Chioma, how much is a session with you? She said, this is the amount. And then I said, send me your bank account. This conversation happened like within 3 minutes. Send me your bank account. She sent her bank account and I paid for a couple of sessions with her. And it was worth it. Now, I don't understand how it works, but all the things that Chioma taught me are the things that I teach. They're the things I know. There was nothing like aha. As it were, the things I'm teaching in the business school. I teach in Lagos Business School. I teach in China, Europe International Business School. I taught in Stanford, the Stanford Seed Program. So these were things I was teaching in marketing and sales. But it's amazing how just having her, there was some energy, there was some wisdom, there was some validation that I couldn't explain that came from it. And I will hire Chioma anytime, any day when I get stuck, because I've used some of the ideas that she gave me. And of course, I've made my money. The money I paid her several times. I think right now, Chioma does like $500,000, something like that. Some of you who know Chioma, I think she does like $500,000 for a session. And then the sessions I had with her were 2 hours. But sometimes we didn't use up the 2 hours. And then she will record the session and then send to me. Fantastic girl. So that saves you time. I'm just saying, guys, if you want to grow wealthy, identify people around you who are doing the things you want to do. And then call them, pay, learn to pay. You paid millions to go to university for 4 years. You came out and your life is still as miserable as it is today. You are going nowhere. And then to pay a fraction of what you paid in university for a certificate that has taken you nowhere, to pay that for someone, to someone who is doing and succeeding at what you want to do, you are, you are hesitating. So that's the best way to learn about investing. Of course, there are other ways you can learn about investing. You have your Google there, you have podcasts, you have YouTube. You've got to do a lot of personal development. Okay, so you've got to do that. But it comes to a point of implementation. And that's where a lot of people, you can know a lot, but implementation is a problem. In fact, that's one of the things that Chioma did for me. It was actually more like implementation because I really wanted to get behind her system. And she opened her system to me. So in fact, that was actually what I gained, not the theories. The theories, her slides were like literally what I teach all the time in business school. But I wanted a peek into her system. How does she make this work? And she showed me all the tools that she was using. Because, for some of you who know her, when you see her ads and things like that, her posts, fantastic. Fantastic. And, so that's how you can learn about it. Okay, so let me look at a couple of comments. Let me look at a couple of comments and then questions on Zoom, on TikTok, and on Facebook, and then we'll round off for today. But while I'm doing that, as usual, remember our ritual, your aha moments. Type your aha moments. What will I have for you today? That's usually very good, not just for you, but for every other person. Okay, type your aha moments, and then let me take a look at our, okay. My issue is that the interest I received is very poor. So generally, when it comes to risk and returns, generally, the higher the risk, the higher the returns, but also the more far-reaching the loss. If you lose, it's going to be a big one. But if you gain, it's going to be a big one. So many times, bonds are literally low risk. You're guaranteed to get your fixed income and things like that. And then that 18% that the government is paying you, you can make, this has happened to me, you can make 60-something% in 1 month, in 3 weeks. I just did it with Presco. So many of you, I told you to buy Presco in November. Then I hopped on it. I told you also to buy UACN. At that time, UACN was 22. Today, I think it's 36 something. Presco was I bought Presco at 458. The time I was telling you guys to buy, 458. Today, Presco is 750 or 770. Somebody can check it and put it in the comment section. And then this movement happened within 3 weeks. So it's almost, so you do the math, like 458 to 758. That is 300 naira added. So 300 over, that's like 70-something%, like almost 70% in 3 weeks. But it is more risky. If you lose, you can lose everything. Because I've also done an investment. I bought Nigerian breweries as a novice at 40-something naira, 48 naira. And then I had to offload it at 37. I lost so much money because I bought a lot. I lost so much money. But I took what I sold and then put it into another stock that now did so well and did 3 times what the Nigerian breweries did to me. So the higher the risk, the higher the return. But also, if you fall, it's going to be a very, very big fall. Okay. Okay, let's see. What other question do we have here? Okay, Dr. Eli says, so interesting, coach. I'm set to embark on this adventure with your mentorship. Fantastic, Dr. Eli. Yep. All right. So Emmanuel says, my aha moment is knowing the difference between bonds, ETFs, and stocks. Fantastic. Okay. So Far Beyond has just confirmed that Presco is 758 right now. I bought at 458. So you can imagine, if you put in 20 million naira in that stock? So what it means that within 3 weeks, that your 20 million is almost multiplying itself. It's probably like 35 million or something. That's how powerful it is. Okay. Colin says, I bought Presco at 645 with Afri Invest. Up till now, it is still executing. Is there any way you can help, sir? What kind of help? What do you mean that it's still executing? You bought it and it's still executing. I don't get that. Okay, unmute. Emeka, unmute and then clarify what you mean. What do you mean that you bought it but it's still executing?
Okay, thank you, sir. I bought Presco with other one, just like those of USC and the rest. But others went through successful. But that one is just still pending, kind of. I don't know what to do. I've tried to contact them. No way.
What do you mean by that you bought it? So you already bought it. You have the shares of Presco now.
Yes, sir. Yes, sir. I do. I can make a screenshot. Consent, please.
So what do you mean by it's still executing?
Others have gone through successful. But that one, you just wrote executive with a little yellow dot there on Presco alone.
But do you see the shares you've bought in your portfolio? Is it in your portfolio?
Yes, sir.
Okay.
I bought Zenith Bank.
So I think it's a platform thing. Please contact them and then let them explain that. It's there's nothing like you bought it and it is still executing. If you bought it, you've bought it. It's executed. They executed the contract. Did you get your purchase contract? Did you get purchase?
Yes, I did, but for that one I did not.
So contact them.
Yes, I did for that one, but I didn't get for that one.
Yeah, contact them. You need a purchase contract. So still executing means that if it is showing it's still executing, then you haven't bought it. So I don't know how you are seeing the shares in your portfolio when it has not executed. That's the confusion in your whatever. But contact them. Let them clarify, okay? Because it's not possible
Okay,
to
sir.
buy Presco at 645 right now. And so if they haven't bought it, and if you haven't gotten a purchase contract, then you know you don't have it.
I bought it 2 weeks ago, not 2 weeks.
Okay, so clarify with them, okay? It's a platform thing. All right, so let me take a look at Facebook. What are your aha moments, people on Facebook? Okay, and on TikTok, Clifford says, I'm a Zambian. I have $3,000. What can you advise me to invest to earn a living? I don't know very much about the stock market in Zambia, if there is one, but you can invest in financial assets, okay? Like stocks or like bonds or like ETF, just like we've talked about. So you can invest in those assets, or if you want to start on a low risk, you can try mutual funds or ETFs. And then as you are doing that, you can now take some time to learn about picking stocks by yourself and not depending on the mutual fund operator to be able to do that for you. Okay. All right, ladies and gentlemen, so it's been a good night. And so I hope that you are going to take the insights that you have picked up tonight and implement them and change your situation, because it is totally wrong for a 40-year-old not to have an investment portfolio. Even a 35-year-old is not right. Okay? By your 40s, you need to be perfecting your portfolio. It should be growing and perfecting. But if you haven't, it is not late. It's never late to start, not even at 60. It's never late to start, because compounding is still your friend. It might not be as much as if you had started when you were 18, if you are starting at 60, but it will still serve you. So remember, all the financial problems you have today is because you didn't invest yesterday, and any financial trouble you are going to have tomorrow is because you are not investing today. And then the quickest day, the soonest time for you to start investing is tomorrow morning. Tomorrow morning. Open an investment account and then buy your first asset. And if you already have a portfolio, tomorrow, take a look at your portfolio, reevaluate it, and then make it better and make it bigger. And then whatever happens, keep showing up, because you have no idea what's coming your way next. And I'll see you exactly same time tomorrow evening, same time, same Zoom link tomorrow evening. Don't wait to be reminded. I'll be here waiting for you. So you all have a very good evening, and God bless you.